All right, we are live on a Wednesday for another SNL show. My name is Lane.
And I am Scott. Good morning. We're glad that you're with us today. And we're going to talk about the crazy housing market once again and what's happening this week.
That seems to be the topic, crazy housing market. But guess what? We're going to dive into different things related to it. Maybe is there improvements coming? We're going to talk about why it might be crazy. So let's get to it. First banner, are rising housing prices a cause for concern? We keep maybe hearing bubble. Are we in a bubble? Is the bubble going to burst? And we've done videos on this in the past, but the reason why people are questioning it's a cause for concern, first of all, prices are outrageous, but they're outrageous because the interest rates were at historic lows. They're still at very low interest rates. We're basically at the same interest rate today as we were this time last year, and things were starting to get crazy at this time last year as well. So there's different things going on, but Scott, let's bring you back in. Like, are rising housing prices a cause for concern?
You know, it's a great question. As we always preface, we don't have a crystal ball, but what we do know, Lane, is that demand is still unprecedented. And we know there's a shortage of housing across the country. We're not affected quite so much here in Southern California by that. But as we talked about, there's a migration effect, if you will. A lot of Californians are moving out of state and they're having trouble finding homes because the builders aren't building as many homes due to skyrocketing lumber prices right now. There's so many other factors that kind of contribute to all of this. And that is just putting a squeeze on the supply from every direction. And again, if we look at Economics 101, supply and demand, when supplies are low, demand is going to be high. And that's what's pushing our prices up. So I'm thinking in the immediate near future, to give my answer, I don't think they're cause for concern. I think there'll be a natural leveling off as some buyers do exit the market because they just say, you know what, psychologically, that's too high a price for us, or qualifying wise, it's just too high a price for them. Even with low interest rates, if your mortgage is suddenly $100,000 higher than you expected it to be, that's a big chunk of change to think about.
Yeah, so let's bring up the next banner because there's a couple of things that are tying in there. You're saying that maybe as interest rates start to slowly go up, buyers might jump ship. I know in the article that we read, that's what the term that they use, but buyers might be put on pause or wait to see what prices do, or wait for some sort of a correction or what have you. So that will bring maybe demand down a little bit, and that would free up because we're seeing 20, 30, 40 plus offers on some listings. So we could use a little bit of an ease on the competitive marketplace and a little bit of demand and an increase in inventory. So they're talking about economic conditions. Economic conditions are improving. Hopefully, and it stays this way, but the California COVID numbers look like they were improving and they're continuing to improve. So what we're probably starting to see is we're starting to see homeowners finally maybe feeling a little bit more comfortable to put their home on the market, because when you're selling and you don't have anywhere else to go, you have to have people that you don't know come into your home to take a look before they submit an offer. That's just the way it's always been. And because real estate's the number one asset for a lot of people, of course, somebody's going to take a look and kick the tires before they're not going to write an offer sight unseen in this marketplace. So yes, with hopefully the numbers continue to improve, vaccination numbers continue to go up, maybe people are going to feel a little bit more comfortable putting their homes on the market and working on a plan of moving wherever they want to move, but that will hopefully help the inventory levels there. So if we have a little bit of pullback from buyers because of an increase in interest rates, and we have a little bit more inventory coming up because maybe some people are feeling more comfortable, that'll help. But will that be then all of a sudden turn into a buyer's market?
Well, I think that's a great question, Lane. And to your point, if we look at, again, a rising prices cause for concern, if based on what Lane's saying, the economic conditions shift a little bit, if we have a few buyers exit the market, if we have a few more sellers come onto the market, that will equalize. Again, think about that. The supply rises a bit, the demand decreases a little bit. That could level things just a little bit. And that would, I think, stabilize prices to some degree without some catastrophic event happening. There's always the people out there thinking, okay, the sky is falling, we're waiting for the next thing for prices to crash. That's, of course, one of those things you don't know. It's a 2008 type situation. You don't know till kind of after it's happened. And we do have some buyers out there that are saying, you know what, it's just getting too high for us. We're not psychologically comfortable. And that, again, to Lane's point, is one reason that people are exiting the market. But I think we've got a different type of underlying situation as we've had before. We've talked about it. There's a surprising percentage of the offers that are all cash today. We know that homeowners are actually sitting on more equity than ever. They've refinanced and are looking at payments that are lower than they ever thought that they would have. So from that standpoint, I think the underlying conditions are stable unless there's some global situation.
Oh, yep, there. I agree. I'm sorry, you froze for a quick
That's
second. I
okay.
didn't know if you were done. But yeah, no, I completely agree. And as we jump into the next topic we're going to be talking about, so we're going from economic conditions, which again, economic conditions, take a look at supply and demand. Hopefully we get a little bit of increase in supply soon, and then maybe the demand peels off just a little bit, but it's brutally competitive out there. But the next one up there, the next one is new home builders. You touched on a little bit. To build a new home, it's a little bit more expensive than it has been, right? Increased lumber costs, increased material costs, but there's an added pressure of tradespeople too, of contractors, of plumbers, of electricians, of people that you need to build homes, because a lot of us that stayed in our homes and were working from home realized that there were a lot of honeydew projects around the house or stuff that you would like to have done, or maybe you wanted that electrical panel updated. So all of the good quality tradespeople all over the country, really, of what we're hearing, they're all in demand and they're all booked, and they're all booked for a very long time, at least the good ones are. So there's a lot of pressure on new home builders right now, and they're not being able to pump out new homes as quickly as they want. Also, they have a lot of folks that are moving. Let's say they're going from California to Texas, and new home developments in Texas. There's different timelines that have to be met too. Where like if you sold a house in California and you want to move in at a particular time in your new home development, I guarantee all these builders are getting pressure of like, hey, you need to get this done in the next month. So there's so much pressure on these new home builders, and they're not being able to get done as quickly or build as many homes as they want, which is hurting the supply levels as well.
Lane's absolutely right. And I know at the outset of our video today, I kind of hit an overview of what we'd be covering. So I don't really have anything to add to that. Again, we can see, again, as I say, it's just that migration, a trickle-down effect across the country, and we've got to see some easing there. One thing, I will say is, to Lane's point, the contractors, the subcontractors in specific, they're crazy booked beyond what they could even do. And that is definitely going to have an effect on these home builders, because they need these subcontractors, whether it's plumbing, heating, electrical, foundation, framing. They need all these subcontractors to be on the job, and they're demanding even higher prices now too. So again, we think not only just lumber prices, but labor prices are up too. That is putting upward pressure on these builders also.
Yep. All right, what's next? Interest rates. Okay, so we talked about this on the last week's episode, so we won't go in too much in depth here, but we are noticing interest rates are starting to increase a little bit here. So 6 months ago, 7 months ago, you probably could have gotten a 2 in the interest rate. Now you're going to get a 3. But is it a high 3? No, it's still a low to mid 3. And this is exactly the same level that we were at this exact point in time last year. So we still have historic low interest rates. And we were talking this time last year that these were the lowest interest rates that we've seen in forever. So it's still very, very low interest rates, but they're starting to go up. And so it adjusts some affordability for some buyers, because as interest rates go up, their monthly payment goes up a little bit more. Maybe because their monthly payment's going up, they can no longer look at the max price anymore. And prices, as we know, are skyrocketing too. So are they going to get priced out of the market, or are they adjusting their prices down? Time will tell, but I do think that we are going to see a segment of the buyers, as we mentioned earlier, kind of hitting the sidelines, either putting it on pause, or they're being priced out, or they think that, things are just a little bit ridiculous right now, so just want to see what happens. So we might see a little bit of ease in demand, hopefully, because we need it. I'm saying hopefully because we do need it in the next 6 to 7 months.
Great points, Lane. And again, it does bear talking about interest rates this week, even though we discussed them last week at length, because they're volatile, they're moving, they're up, they're down, they're changing on a weekly basis. And something historically that I've seen in the past as well is that while we will have some buyers move to the sideline as rates inch up a little bit, because of the fact that there's still historic lows, there's still amazing pricing out there, some of the buyers that have been on the sidelines will actually jump in, because they see that there's going to be a rise. They say, okay, we think we've hit bottom. So if we were timing things to hit the lowest rate, we've missed that bottom, but we want to get as close as we can. So some of these buyers are actually going to jump in right now. And we've seen that historically in the past. It's kind of the the 2020 hindsight, armchair quarterback type of thing. You see what's happened and you're like, okay, I better make my move now.
Yeah, absolutely. Like I think that might be a temporary small little, oh my gosh, it's even crazier, because if they feel like, hey, I need to buy something now because I think the rates might get to a 4, you might have a bunch of buyers that are like that too, and just jump on it. They're going to get off the fence from waiting, and then they're going to be a buyer.
And I think, again, that's a small impact. And again, to Lane's point earlier too, we'll see some people take the sidelines. I think it's going to take perhaps another point jump honestly, to see a significant pullback by a large number of buyers. And if we see another point rise, I'll bet you that we're going to start seeing the demand ease considerably. Right now, I think we're hearing people talking about it, but I personally haven't had anyone say, well, I'm out of the market now. Lane, how about your clients?
Not yet. I didn't catch all of the last bit of that, but I'm assuming you said I haven't heard anybody say I'm out yet.
Right.
And yeah, I haven't heard anybody say that I'm out yet.
Cool.
Do we have any more banners? Nope, I think that's it. So one of the things that I did want to talk about, and maybe we can add it as a banner after edits or something like that, but I want to talk about different generations. Okay, so who's buying homes right now? And because that's also might affect the demand and supply, because they're talking about different multi-generational living options. Right, there's different things that builders are doing now, whether they have a casita in the back, or different cities, even here locally, they're allowing ADUs, so you're allowed to bring in your parents to live in the back, or your grandparents, or whatever you need. So you're seeing maybe families come together a little bit more often than you had before, and so now you have a pool of millennial buyers and maybe baby boomers pooling their money together to buy a big property or buy a bigger home or something with an ADU or something with a casita in the back, and you're starting to see that too. So if you're having two families blend together into one, that might help inventory levels a little bit there. And a lot of the new builders that we've been reading are actually building for multi-generational living now.
No, Lane's absolutely right. And again, as we see the new builds across the country, they're adjusting too. Just as we come out of the pandemic, people have been more comfortable working from home, and commutes are less thing. People are going back to work, but maybe just 3 days a week or 2 days a week, and they want to have that home office that's separate from the rest of the family. So we're seeing a lot of things change with regard to that. And when we talk about generations, on another kind of a side note, what we're also seeing is multi-generational financial support. As we mentioned earlier in this video, current homeowners, the baby boomers, are sitting on more equity than ever before in history. And I know we've touched on this before, but we're seeing it right in our own marketplace here. Many of these families are saying, we're not going to leave a legacy behind. We want to help our kids now and have them get into a nice house and enjoy the family time with grandchildren and so forth. And they're using some of their equity that they have now, some of their savings, retirement savings, what have you, and they're helping fund the down payments or helping in other ways to get their kids into homes. And what we're seeing is some of these young families, first-time buyers, maybe second-time buyers, their first purchase is actually at a little bit higher price point than maybe an entry-level home would have been, because the parents or grandparents are helping out. So what we're seeing is also a rise in demand of these larger homes here. And so again, back to the very first question we had, are rising home prices cause for concern? When we're having multi-generational help, these parents are looking more at the immediate gratification of getting into a home and less concerned about a little bit of an increase in price. So that's kind of another dynamic that we're seeing right here.
And what probably helps is, my guess is, if they're getting some financial assistance from family, their loan amount isn't changing, but their price is changing. And if that's the case, then they probably have more equity in the home. They have a higher down payment. And because they have a higher down payment and more equity in the home, there's a less chance of being underwater if there was a correction, and less chance of, and a less chance of being underwater if they're due to a correction, means that we're probably not going to have the crazy Great Recession landslide that we had in 2008, 2009.
Fantastic observation, Lane, and exactly right. I didn't articulate quite as extensive as I could have, but we're seeing, with the helps of the older generations, our down payments are well above the traditional 20-25% that you would see. Oftentimes the average is 50% down, and we're seeing almost zero of the heavily leveraged loan to values with the 5% downs and whatnot. And to Lane's point, that's going to insulate people from some little shift in the marketplace as we see some adjustment. So again, taking away perhaps some of that fear factor of rising prices that we did mention at the outset.
Before we close out the generations topic, if you had to take a guess, which generation is number one as far as the buying pool? Like, who's buying more homes right now per generation?
I'm sure, Lane, you have the answer to that, because you are a stats guy and I'm kind of more feely guy. Subjectively speaking, I'm going to say, from just what we see, kind of boots on the ground, I'm going to say the biggest generation of folks buying houses, I don't know what this generation would be called, but I'm going to say they are in their early to mid to late 30s. That's the demographic I'm going to guess is buying the most homes right now.
Which I think is a And you're right. So millennial is the number one right now, and that's nationally. And I forget how late millennial goes to, but maybe it's like mid 30s or something like that, mid to late 30s right now. So you're right on as far as like the early millennial generation. That's the biggest buying pool right now.
Yeah, and we're seeing that definitely across the board here in our Southern California marketplace.
Yeah, absolutely. But that's it for us today on SnL. We love coming to you with different topics and relevant things within the real estate marketplace. We're going to be back next Wednesday, as always, same time, same place, maybe a different background. I don't know. I think we like these backgrounds, though. We're sticking with them, right?
I am super comfortable with this background. Again, a lot of you have seen me come from my home office of late, but I've got construction going on next door to me, construction behind me, and new sewer lines going on in front of me. So you did not want me at home today, and I'm loving being in our 7 Gables studio here. You'll see improved lighting even as things move forward. I'm super excited to have this space to come to you guys. And as Lane says, we don't have all the answers. We love having the dialogue back and forth and love your input, your questions, your feedback, so that we can make these shows as informative and entertaining also as possible. So thanks again for watching.
Absolutely. See you next week.
Bye.